Hi everyone, hope you're all doing well, and today we're going to talk about the stock market correction that's currently going on. So I thought a few days ago it kind of calmed down, but here we are, we're going back at it again. Stocks are starting to go a little bit lower than what they were a few days ago, and yeah, it's been quite an ugly few days really on the stock market front. And we'll be covering a few points, and hopefully this gives you a little bit more confidence with what's going on right now. I know some of you guys, maybe this is kind of your first kind of correction phase. You're kind of entering the stock market, and like I say, hopefully this information does give you a little bit more confidence in there, and remind you just to take advantage and gives you that long-term perspective of how good of an opportunity this could be going forward. So yeah, we've got a lot to cover, so if you could smash the like button, that'd be absolutely amazing. So let's just start off with talk about the stocks that are pulling back. So a lot of this isn't like, you look at the Dow, the Dow hasn't, not really pulled back. It's more like the Nasdaq. The Nasdaq's pulled back a lot more. I think that's pulled back about 7%. But that is definitely one that was kind of signaling that it was a bit overvalued at the moment. And a lot of the big tech stocks were getting to quite high valuations, and that was very noticeable when we were coming around to earnings, and some of these tech stocks were bringing out 10 out of 10 earnings. I think Apple was a key one like a few weeks ago, and it brought out amazing earnings and the stock did nothing. And it was like, okay, that's a worrying sign when we get to that point. And even more companies have bring out some more amazing earnings. I think the video was another one that did some earnings that were pretty good. Stock did nothing, and it was just kind of factoring in, hey look, there's just no more room to go, and that was one of the big signs. And the valuation side of it was a key standout thing to me a month ago. I was saying on the channel, I was like, I can't even build positions. I'm literally buying companies at the moment, and the stocks are just carrying going up, and it's just a nightmare at the moment. You couldn't buy any positions, and the valuation side of it was just absolutely bonkers. But the key thing to remember in a correction, and you'll notice this especially, is that the Nasdaq tends to be in a bull market a higher performer. Very same thing works if we're in a bit of a bear market. What will happen is the Nasdaq goes down lower. And what you'll notice as well is a lot of the higher tech stocks, their names will pull back a lot quicker. So let's just say, for example, if we had the Nasdaq that pulls back 7%, for example, what will happen is a lot more of the individual stocks in there will pull back maybe 14%. So you'll start noticing that if we have even a further drop here, what will happen is, say if we go down to a Nasdaq of 10% drop, the individual stocks will go even further than that. And that's the key thing that I was saying a few months ago on this channel. I think it was last month actually. I was saying, hey, there's a lot of people out here that have never been in a correction. They don't know what a bear market is like, and they're buying a lot of these very spec stocks that, hey, look brilliant in a bull market, and they're going up 10% a day. But the problem is if you hit a bear market, if you hit a correction, you'll see a lot of these stocks plummet. A few of these stocks that were really hyped up on, maybe this will happen with it, this is a catalyst why it will go up in a month. And that's the bad thing about when you get into them really big hype stocks. What will happen is you'll see them in a correction phase, they just fall off a cliff. And that's been very noticeable as well over the last few days. And that's why I was like, just be really careful what you're doing. Now, everyone's a genius in a bull market, but now we're going to start seeing who can actually swim. And the valuation side of it was very clear a few months. I warned you guys. I went up to 30% cash. I said to you guys, hey, just be really careful out there. The valuations are crazy. You look at this in the stock P ratios, the stock forward P ratios, they were just crazy. The really high valuations. And another key sign was margin being very high as well, which is never a great sign. And the valuation side of it just kept going up and up, and the valuations of stocks were just pricing in 2 years of growth into the share prices, and it was an absolute nightmare. So the valuation side of it was always pointing to us that we had a correction at some point coming. It was just about when it was going to come. So yeah, the valuations at some point you got to click and go, we can't do this forever. And like I say, with the stock price side of it as well, you'll notice how much certain stocks move a lot different in a correction phase. And I think that a few people unfortunately might got a little bit burnt with that, because they might be buying a lot of these high risk stocks that are really good in a bull market, but as soon as you hit a bear market, look how fast they correct. So that's something that was really key. So I think that's just a lesson going forward, that valuations do eventually catch up with stocks, and you've also got to be very careful about what you do buy. So next up, let's just put this into a long-term investor perspective. Dips are amazing. As a stock market investor, if you're investing for a long time period, dips are the best time to buy companies. And while we're having this dip, I'm pretty sure you should at least have bought one thing right now. Dips are the best way to make money. You're getting great companies at cheaper values that give you more upside. And if you look at dips on the stock market chart, if we look at an S&P 500, every time we've had a major dip, it's always recovered and gone higher. And that's the key thing. And as well as this, realistically, when we look at this dip that's currently on, this is nothing compared to what we've been through. We're not really even, if you're struggling a little bit with this dip right now, you might want to question whether or not the stock market is really a thing that you want to be investing in, because we've been through dips that are even bigger than this. The March dip, let's go through the March dip, for example. The March dip was kind of this is actually a really bad scenario. Like, I actually think, how far is this going to drop? In March time, it was like, okay, we've got an actual pandemic, how low is this going to go? And that was a question. There's no doubt here that this correction isn't going to do anything what the March dip was. It's only a smaller dip. But the thing is that if you go back to March time, if you were an investor and you were an investor buying in that dip in March, just think about how much are you up now. Like, buying in that dip is not about worrying what the stock's going to do in a week's time. It's not about what the stock's going to do in a month's time. You are investing for a long period of time. Where's the stock going to be in 2 years' time? Where's the stock going to be in 5 years' time? You're not thinking about what is happening right now. You're thinking about what's going further on down the line. And I think one thing that can really catch people up is that they actually start looking at their stock market portfolio every day, maybe every hour, especially when it's dipping, and like getting really depressed by it. Like, I'll be honest with you guys, I've not looked this week. I've not looked at my stock market portfolio, how much up or down it is really that much, since I think Monday was the last time. I've hardly looked at my stock market portfolio. I just generally don't look at it. I don't get caught up when it's going up high. When it's just when the stock market's going down lower, I'm sure my stock market portfolio is down, but I'm not bothered. I'm not really bothered what it's done this week, because I know that the investments I put in place are for stocks that I'm holding further down the line. Like, a lot of the catalysts will come into play a little bit later on. And that's one thing that I'm sure some of you guys might have started realising, not to get hung up looking at their portfolio. And like I said, the thing is as well, the long-term mindset, you're not investing in the companies, you're not investing in companies right now for what they're going to be doing in a week's time, a month's time. You're investing in the long period, and in the long-term period, some of these stocks will do amazing. You won't, in 2 years' time, you won't remember this dip that's going on right now. The stocks will be higher. It's just like in March time, if you had the bravery to go buy in March, I was saying back in March time, I was like, you know what, I generally don't know what these stocks are going to do in the next, few months. But I tell you right now, in a few years' time, you'll be so happy you invested in this time. Like, they're so cheap valuations. And it's one of those, you don't get caught, start thinking about, oh, what happens if I start going down 5%? What if I go down 10% if I invest now? That's something you don't worry about. You got to start thinking about what companies will be performing well in a few years' time. And if you're a long-term investor, dips are always the best buying opportunities that you want to be picking up on. And like I say, you only have to look at March time to realise the benefits of that. Now, this is a question that I got asked quite a bit, is how much will it drop? And I'll be honest, this is such a tricky question to ask. I don't have a crystal ball to look into. I cannot tell you this is exactly where this is going to rebound. I am a long-term investor. I am not a day trader. I generally have no idea, but I'll give my opinion on what will happen. My opinion is that we are going to have, it won't be anything like March. My opinion is that we were overvalued and we were due a pullback. I've been on this channel loads of times and said that. How much will it drop is a tricky question. I think we deserve the drop of somewhere between 5 to 10%. We're currently around about 7% right now. So I do think we do have room to go a bit further, but it wouldn't surprise me if we did have a rebound right now. Realistically though, it could be more than that. We can't predict where the stock market will go. You cannot time the market. So many times I see people go, well, I think it might go down 3% lower, so what I'll do now is I'll sell all my positions now and I'll buy back in when it's 3% lower. It doesn't matter, just carry on holding them positions, because a 3% difference isn't going to matter in 2 years' time, 5 years' time, 10 years' time. If you're down 3 or more percent. I've seen this so many times. People just trying to time the market on a couple of percent. Like, it don't matter. It does not matter. You know, you're holding these for the long term, not the short term. So with how much it will drop, I think we have the potential not to go too much lower than this, but it would not surprise me if we were to go even lower than this, because the valuations are still quite high. Let's not forget, the valuations are quite high. And as a long-term investor, to be fair, and I'm sure you guys are as well, is like, you're actually willing the market to go lower. Like, you actually want it to go a little bit lower, because the lower it goes, the better valuations that companies get at for you to buy them and then make more money in a long-term period. So if you're panicking about, I don't really want it to go much lower, then that's something of a mindset you need to change. Like, valuation, as long as the stocks keep going down, I'm happy to just keep buying more and more. And that's the thing, like, you shouldn't, in my opinion, I don't think we'll drop much further than where we are right now. I mean, we're about right. But like I say, it could go lower, and as a long-term investor, you probably want it to go lower right now. While it's on this drop, you will appreciate, you know, if you had a good cash pile, to go buy some of these opportunities right now. So that's my opinion on that. Like, we probably won't go much lower, but don't be scared of it. This is a great opportunity to go buy. So I guess this kind of leaves me with my last one, my plan and getting a shopping list. So I was going to do my video today talking about the stocks I bought this week, but because I've started buying some more stocks yesterday, I just kind of scrapped it, and I thought, right, we'll do this video. I might do a video on Beyond Meat's earnings, I might do a video on DraftKings earnings, see what happens there. But my plan going forward from here, so the first thing that I would say is that you want to start getting a shopping list of companies that you think, you know, great companies, not any of these companies that I think they might win this contract which will make them go up so much, you know, none of that rubbish, you know. Get really good companies that you think will perform very well over the next 2 to 5 years or even longer. You know, start getting a list of companies that you really like that think will start performing very well over the next few years that are on a bit of a dip. Because like I said earlier, you know, some of these individual stocks where the stock market drops 7%, some of these individual stocks might drop even more than that. So look out for them ones as well. So get a shopping list together. For example, one of my shopping lists was Shopify. It was a company I really like, but it just went up in value and I wasn't able to build a good position. I'm looking at that now and I'm like, okay, it's dropping a bit. I'm looking at a company like Amazon. I'm like, okay, I started buying Amazon a few months ago, went up a little bit and it hadn't done much. It's dropping back a little bit. And I'm looking at Amazon like, more people are just going to use Amazon going forward, so that's going to do well. Amazon Web Services and, you know, the other income streams that they will have, I think that's amazing. So I'm like, Amazon will be putting in more profit, more revenue, will be a higher share price in a few years, but now it's selling off. So you need to start identifying companies that, really good companies, growth, companies that will have growth, companies that will have profit growth in the next few years and will be in a better place. You need to be looking for them companies and start identifying ones that you want to buy and start edging your way into them companies. And at the moment I was at a 30% cash pile. This week has taken, I did buy a few things this week and it's taken it back down to around about 20%, maybe a little bit higher than 20%, but around 20% cash pile. So I have gone in a little bit here, but as well as that, I am keeping enough cash on the side because, like I say, how much will it drop? We don't know. And the worst thing you can do is you see the first drop and then you go all in and then it goes down another 5%, it goes down another 10%, and then you're like, I've spent all my cash on the first dip, I've got nothing else to buy now, or I don't have any money to buy anything else. That's the worst thing to do. You know, you want to just edge yourself in nicely into some companies that are on a dip, and that's what I've done this week. But I've also kept some cash if we do go a little bit lower. So that's also something you want to do. You know, you start identifying, get a Christmas shopping list together. Start identifying companies that you want to buy that maybe was just a bit higher valuation, that's pulled back, that will do great companies in the long term hold. And just start nibbling in. But you know, the worst thing to do is go all in on the first dip, and if we do go lower, that's something to be careful of. So hopefully this video really does help. You know, these times are the best times as a long term investor. And like I say, it's definitely been a few interesting days to see who's swimming at the moment and who's been sinking. But this is kind of a game plan that you want to be following. And like I say, the main thing is, you know, don't get hooked up on what your portfolio is doing, be thinking this is a great opportunity as a long-term investor to buy some quality stocks that are starting to have a little bit of a dip at the moment, and that's the thing you want to be thinking about. So hopefully that was useful. I know on a day like what we had yesterday, it's something that I always know some of you guys really appreciate. Hopefully it gives you that confidence to keep in there and start looking for them opportunities. So I hope you did enjoy it. If you could, smash the like button. If you do want to join my stock market group, there's a link in the description. Join through there. You get to see what I'm buying and selling in. And if you do want to start buying some shares, there's a link to a free trade account, and that's in the description as well. And you also get a free share as well when you open up an account through there. But I hope you enjoyed it, and I'll see you in the next video.